US policy shock triggers commodity rout, sending global markets into turmoil. Global commodity markets were jolted on Monday after a sharp policy signal from the United States rattled investors' confidence, triggering one of the steepest multi-asset selloffs in a year. Yet the center of upheaval was President Donald Trump's decision to nominate Kevin Warsh as the next chair of the US Federal Reserve, a move that abruptly reshaped expectations around American monetary policy and sent shockwaves across global markets. The immediate fallout was most visible in commodities where gold, silver, oil, and industrial metals suffered heavy losses. Gold prices slid nearly 5%, dropping to a more than 2-week low, having surged to record levels above $5,300 per ounce in January. Silver fared even worse, plunging over 7% in a single session. The declines extended a brutal reversal that began late last week, when gold recorded its steepest one-day fall since 1983 and silver endured its largest daily collapse on record. Market interpreted Warsh's nomination as a decisive pivot away from expectations that the Federal Reserve would pursue aggressive monetary easing once Jerome Powell steps down in May. Although Warsh has recently spoken in favor of rate cuts, his past reputation as a staunch inflation hawk revived fears that US interest rates could remain higher for longer. That perception strengthened the US dollar, eroding the appeal of a dollar-priced commodities and accelerating capital flight from metals. The sell-off quickly spilled beyond commodities into global equities. Investors rushed to liquidate assets to cover mounting losses, pushing stock markets lower for the third consecutive session. Asian and European markets led the decline, with resource-heavy stocks coming under particular pressure. MSCI's All-World Index fell 0.5% on the day, extending losses from its late January peak, while Wall Street opened in the red, with all three major US indices trading lower. Rising anxiety was also reflected in volatility gauges. The VIX index edged toward the psychologically significant 20 mark, signaling growing unease over market stability as investors reassess the trajectory of US policy under the potentially more hawkish Federal Reserve. Industrial metal also faced mounting headwinds. Copper slid 3%, while iron ore market weakened amid concerns over elevated inventories and softening demand in China ahead of the Lunar New Year holiday. Beyond metals and energy, weakness spread across agricultural and niche commodity markets. Tokyo rubber declined nearly 3%, while Chicago wheat and soybean prices fell around 1%, underscoring the breadth of the downturn. Despite the severity of the sell-off, some analysts caution against interpreting the slump as the beginning of a prolonged commodity bear market. Instead, many view the rout as a sharp correction following January's extraordinary rally driven primarily by a sudden repricing of the US.